Hey everyone, welcome back to Corporate Decoder, the place where we turn dense corporate filings into your next financial obsession. Today we are diving into BioVie Incorporated's quarterly report, and let me tell you there are some interesting financial maneuvers and a whole lot of legal drama happening beneath the surface. We will break down what these numbers really mean for the company's future, so stick around, and hey, if you love getting these kinds of unfiltered insights from company reports, make sure you are subscribed. Also, we have a fantastic Discord community where we break down these filings even further, so link is in the description below to join the conversation before we really get into the weeds. So this is BioVie Incorporated's Form 10QA report they file every 3 months. With the CC, it is basically a checkup on how the company is doing financially and operationally. Think of it as getting the inside scoop on their latest performance and any noteworthy events. BioVie is a company that is trying to make a name for itself by developing new medicines for brain and liver diseases. They are really focused on conditions like Alzheimer's, Parkinson's, and what they call long COVID, a persistent set of symptoms after a COVID-19 infection. They also have a program for liver disease called cirrhosis. It is a tough field with high stakes and a long road to success. Now let's look at the heart of the report, the financial statements. First up, the condensed balance sheets. These give us a snapshot of what the company owns and what it owes at specific points in time. As of the 31st of December 2025, BioVie had about $20.5 million in cash and cash equivalents. That sounds like a healthy amount, but remember, they are a clinical stage company, meaning they are not selling approved drugs yet, so they burn through cash to fund their research and trials. They also had about $18.8 million in working capital, which is the difference between their current assets and liabilities. Looking at liabilities, BioVie had roughly $2.9 million in accounts payable and accrued expenses at the end of 2025. This is the money they owe to their suppliers and for other short-term obligations. Compared to June 2025, when this number was around $2.2 million, it has increased. This could mean they are perhaps spending more on services or supplies as their operations continue. When we look at stockholders' equity, we see a large number of authorized shares for their common stock, but significantly fewer shares were actually issued and outstanding. This is common for companies that might need to raise capital through issuing more stock in the future. For example, at the 31st of December 2025, they had about 7.5 million shares issued and outstanding, whereas back on the 30th of June 2025, they had about 1.9 million shares. This huge jump is likely due to new stock issuances to fund their operations. Next, we move to the condensed statements of operations. This is where we see how much money the company made or lost over a period, and for BioVie, the story here is one of consistent losses. For the 3 months ended the 31st of December 2025, their net loss was about $6.1 million. That is down a bit from the $7.1 million loss in the same period in 2024. The big chunk of their expenses, as expected, is in research and development, the whole drug discovery and testing process. For the 3 months ending December 2025, R&D expenses were about $4.3 million down from $4.7 million in the prior year. The report mentions this decrease is partly due to the long COVID studies and favourable reimbursements offsetting higher costs in their Parkinson's study as it enrolled more patients. General and administrative expenses, which cover things like management salaries and office costs, were about $1.9 million for the 3 months ending December 2025, a decrease from $2.5 million in 2024. The report points to lower stock-based compensation for executives and directors and reduced consultancy fees as reasons for this dip, but notably legal fees related to class action. Litigation went up. Now let's get to the bottom line. For the 3 months ended the 31st of December 2025, the net loss was a hefty $6.1 million. This is about a $1 million improvement from the $7.1 million net loss in the same period of 2024. Over the 6-month period ending December 2025, the net loss was around $11.2 million, quite similar to the $11.3 million loss in the previous year. It appears the company is managing its burn rate somewhat, but without any revenue, they are still deeply in the red. This number here, the weighted average number of common shares outstanding, is really interesting. Look at the jump from 2024 to 2025. For basic shares outstanding in the 6-month period, it went from about 1.1 million in 2024 to over 6.5 million in 2025. This massive increase is a clear signal of significant stock issuances likely to raise capital, as we noted earlier. It means the pie has gotten much bigger and existing shareholders' pieces have shrunk proportionally if they did not participate in those new issuances. The condensed statements of changes in stockholders' equity show how the equity portion of the balance sheet has changed. We see here significant activity driven by stock issuances and stock-based compensation. For instance, stock issuances for cash in the 6 months ended December 2025 brought in over $10.4 million. This is crucial for a pre-revenue company to keep operations going. We also see substantial amounts going to stock-based compensation for restricted stock units and options. This is a common way for companies to incentivize employees and executives, especially in early stages. For the 6 months ended December 2025, this amounted to about $487,000 for RSUs and another $466,000 for stock options. The report detailing stock issuances highlights a public offering in August 2025 that brought in over $10.5 million after expenses. This offering involved units each containing a share and a warrant, and also pre-funded units. This influx of cash is vital for their research and development pipeline. Looking at the stock options granted, you can see the company is heavily reliant on equity compensation. For example, in January 2026, they granted over 355,000 options to directors, and then another slew of options to directors and employees totaling over 2.3 million shares. The exercise price for these options is quite low at $1.31, which suggests they were granted when the stock price was very low. This is a significant dilutive factor for existing shareholders if these options are exercised. The company also has outstanding warrants. As of the 31st of December 2025, there were over 7.9 million warrants outstanding with a weighted average exercise price of around $5.82. Some of these warrants have expiration dates stretching out to 2031. These warrants represent potential future dilution if they are exercised. On the leasing front, BioVie has a couple of office locations. Their headquarters, while modest in rent, has seen a renewal. Their San Diego office, however, which started in February 2024, has a monthly base rate of over $10,000 and a 4% annual increase built in. Over the next few years, they have committed to paying hundreds of thousands in lease payments. This section is always a hotbed for potential trouble. BioVie has royalty agreements for its drug BIV, 201 promising a low single-digit royalty on net sales to various parties. They also have obligations to pay up to $75,000 annually to DocuChem SLU tied to US gross sales, exceeding $10 million for products covered by certain patents. And here we have the big one, the legal proceedings. BioVie is facing a major securities class action lawsuit. It alleges material misrepresentations and omissions related to their ad trial and other aspects of their business. This lawsuit is seeking unspecified damages. On top of that, there are 3 shareholder derivative lawsuits also by stockholders alleging breaches of fiduciary duties by officers and directors. The company believes these claims are without merit, but defending against them will undoubtedly be costly and time-consuming. Now about risks, BioVie acknowledges a significant reliance on third parties to conduct their clinical trials. This means they are not entirely in control of the process. They even cite the issues in their Phase 3 trial, where protocol deviations and CGCP violations at multiple sites forced them to exclude patients' data, leading to an underpowered trial. This is a major red flag concerning data integrity and operational oversight. Here they explicitly mention the risk of future dilution. They state that to raise capital, they might offer more stock or convertible securities, potentially at prices lower than current market values. Combined with the outstanding options and warrants, they currently have a substantial number of potential shares that could be issued, diluting existing shareholders. So what is the big picture here for BioVie Incorporated? On the positive side, they are actively pursuing innovative treatments for significant unmet medical needs like Alzheimer's, Parkinson's, and long COVID. The company is also showing some ability to raise capital through equity offerings to fund these high-cost development efforts. They are also managing their operational expenses, showing some decrease in R&D and GA in certain periods. However, there are some significant concerns. The persistent net losses are a reality for all clinical stage biotech firms, but the sheer volume of potential dilution from outstanding options warrants and future equity raises is substantial. This means that even if the company achieves its goals, existing shareholders might see their ownership stake significantly reduced. More critically, the legal troubles are a major overhang. The securities class action and derivative lawsuits highlight serious allegations about compliance and financial reporting. The company's defense will drain resources and the outcome is uncertain. Furthermore, the issues encountered in their Alzheimer's Phase 3 trial raise questions about data integrity and the reliability of their clinical development process. This could impact future regulatory approvals and investor confidence. In conclusion, BioVie is a company with high potential but also high risk. Its success hinges not only on its drug development pipeline, but also on its ability to navigate these legal challenges and manage its financial resources prudently. It is a classic high-risk, high-reward scenario common in the biotech industry. What do you think about BioVie's current financial health and their legal battles? Are they a diamond in the rough or a risky bet? Let me know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button. It really helps us out, and of course, subscribe for more unfiltered corporate breakdowns. Don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and we will see you in the next one.